Good morning, everybody. We're live, and Marty's going to jingle us in.
That's for the oil price.
We go from green screen with a piano to actually a real piano and a real pool.
Yeah, there's a real piano right
Yeah. Hey, Rob, how you doing?
Good. I like that jingle. That's a good one.
We are now geopolitical experts after 3 weeks with oil chaos. And everybody wants to know what's next. What's hard? What's the play for the rest of 2026? And where we go from here. And CTO should be joining us momentarily. But Rob, you got a short backstop. So we're trying to keep this to 40 minutes today. This one is called By the Chaos. And there is lots of chaos in the world. But before we jump into that, let's go around the horn. Marty, what's going on in your world? And tell us.
Good day, everybody out there. Yeah, we bounced up to 71,300. Good. Obviously, there was a lot of tension on Friday with the Trump 48-hour ultimatum. Everyone was a little tense. And then just like a release valve, today Truth Social delaying it 5 days, and everything goes back to normal, right? So, just another typical weekend of geopolitical tension, followed by a Monday of release. It seems like that's the new pattern.
Yeah, it's weird because Mondays, like weekends, used to be strong for crypto. Mm-hmm. Now all the markets seem to be driven by what the White House says. So let's go to our digital asset correspondents and White House correspondent, Rob. What do you make of all of this chaos, or do you enjoy it? Do you thrive in chaos?
I think some people will thrive, but it really, at the end of the day, it really just comes down to what the price action is doing. But it is interesting, like what you just said about, the weekends used to be pretty stable because it was one of the few markets that was open 24/7, 365, and we kind of would do a little rebounding. But now everybody just does TA, which is Trump analysis. And you just go to Truth Social and see what he posts. And like Marty just talked about, he just put out a post 2 hours ago. It says, hey, looks like we've got a constructive talk between us and Iran, and we're going to forego any kind of military strikes for the next 5 days as we meet with their leadership and go forward. And that's what people want. I want this. I don't want boots in the ground. I don't want a long, elongated war to drag on. I don't want Russia, Ukraine. I don't want anything like that. So this is good news. And and hopefully this, leads us to a nice, strong week. But again, you got to do Trump analysis and go from there.
They call it. They've got a name for it now. It's called the taco trade, right? Taco, TACO.
That's been around for 8 months.
This is a classic taco trade today.
Yeah, exactly. And CTO, thank you for joining us. How are you this fine day?
I'm great. Yeah, what a exciting day.
I saw you on a camel, by the way. Great shot. Loved it.
I did see that. Yeah.
And by the way, I want to remind everybody, people love when Rob and Marty bang heads. So it's like David Sachs versus Jason Calacanis. Keep it up, guys. We love it. And these guys are very good friends. I want people to understand that. But people love drama.
We're all very good friends. We're all very good friends.
Yeah.
All right, let's get into the story. We're going to keep this short today to about 40 minutes. This one's called By the Chaos. Thank you, Rob, for joining us. Marty has some stuff going on. Hopefully he'll be good. But
Mando.
Yeah, sorry. Yeah, it's too early. Not enough coffee. Let's get into the oil shock now tanking. We are in a world driven by oil and energy and scarcity and AI. And this has had anybody who is in any way invested on the edge of their seats. It's pretty clear everything mean reverts. We had oil come down a lot. And literally, when oil tanks, risk assets go up and vice versa. CTO, let's go to you first. What do you make of the oil price right now? Currently, we're at about $94, $88, $89. It's $95 yesterday.
Oh, yeah. This is very interesting. Let me share the screen.
And also we have bond
So-
rates, which are going up as well. So everything is kind of chaotic.
Exactly. So we had this monster candle. When was it? On Monday, the 9th. And then oil went into this consolidation. And when it looks like this is a flag, it often breaks on the upside, but it didn't. It broke on the downside. So this can be a reversal candle. So I think the market here probably thinks that they will wind down the conflict because maybe the oil is the easiest obvious proxy, right? If the boats can't drive through the strait, oil price goes up. If they can drive through, oil price will go down. So this is kind of the market's bet on whether they will wind down the war or if it will be a long, extended, complicated, troops on the ground, Iraq type of situation. We can see reflected in here. Then, of course, market doesn't know either, but that's the best proxy we have. So I think that that's what we see here, and that's why we see massive recovery in stocks today, back over this key support. So bounced again at the same level. This was really do or die, this level here, guys. So we did fall down, but then now we're back above again. Bitcoin, massive recovery, of course. Back up from the low of this flag. And the most curious thing is gold. Like what? It dropped back to the trend line, the long-running trend line we've had here since, when was it, 2024? And we hit that level today and mega bounced.
In fact, that's
Mega
a huge.
bounced back.
That's a big part of the talk today, is to determine, what is the play for 2026. We know the AGI abundance thesis means we need to fly to scarcity or AI. They're the two options. But the question is gold still scarce? Thank you for that, CTO. And we're going to go to a quick chart now from Marty. Marty, you shared this Bitcoin versus gold, which is a very clear picture of how things are converging once again. Everything mean reverts. If something spikes up like oil or gold, it'll eventually roll back down to earth, maybe not to the same levels of a year ago, but walk us through this chart, Marty, real quick, and tell us.
Yeah, sure.
And also bear in mind, does this mean that at last Bitcoin is a risk-off asset, or is that just a pipe dream?
I mean, I think that this chart speaks volumes. You can see there the line shows what October 10th was last year, right, when the TGA was rebuilt. And you can see from then gold started to pick up steam, almost identically inverse correlated to Bitcoin, which is so interesting. And then they came together around that $100,000 line. See that? That's 21 Bitcoin per ounces of gold. It's really interesting. Then there was that crazy spike up on gold, which was instantly sold off, followed by some consolidation, and then we've dived under the line, almost touching. So the asymmetric trade there would have been spectacular if anybody had taken it.
The big rotation we called for, as soon as gold hit, I think 5,200 or 5,500, we said, and Bitcoin was like low 60s. It's like, that is the rotation of the decade almost. Remember that? We said it here about a month or two ago.
But you can see, yeah, exactly. This chart shows you that exact rotational trade absolutely perfectly. Now the question is, will they, will this continue? Will they diverge? I mean, if you are CTO as a technical analyst, what do you see here? Like, what would you predict based on this chart?
I think it's the trend is turning here potentially. It's a little bit early to say, but yeah, it's not just a blip.
Yeah, I think it's a very, very, very interesting chart.
Yeah, and remember, actually, thank you for that, Marty. Rob, what's super interesting, and when we saw gold go on a complete rampage and then silver went on a rampage, I was like getting very excited about Bitcoin because we know it will eventually have to follow. And as you and I know for over 5 years now, we always imagine the day when the market cap of Bitcoin will hit that of gold, which would take us to about $1.7 million Bitcoin. which is exciting. But what do you make of all of this craziness with gold and Bitcoin and scarcity?
I mean, like, I think all four of us are looking at this with our heads kind of tilted, like, oh, that is interesting, and that's where it's going. But in the grand scheme of things, like, when you take a look at gold and silver, and it's the same thing that kind of plays out, which is you have people who feel like this is the flight to safety, this is a store of value, so they go to it. Remember those lines that were wrapped around the corner for people to buy gold and silver?
Yeah.
And they said how much how great it would do. I've got friends, even my brother, who were buying silver at like $20 for years and years and years. And they said, no, we're going to just wait and hold on to this because, we know it's going to keep going up to, they thought it would go to 250. And of course, here we go down again. So like when I take a look at this and I look at what is a store of value and what is it, is this gold will always be a store of value. Silver will be some sort of store of value. But if you take a look at Bitcoin, at what was massively undervalued, that's the trade right there. And if you can take a look at it, it's very easy to say, well, this is definitely, and of course, people say, well, why did this actually happen? I mean, look at everything across the board. You're talking about AI. AI stocks blew up, S&P 500. Stocks are going. Your favorite Tesla is going. Everything's running except for Bitcoin, the crypto market. The undervaluations is where some of the flows go to for the smart money. And they figured it out, and that's why we're here right now.
Exactly. Good. Excellent points there, Rob, too. Now, the other question that people have, so what happens next? Is the rotation over, or is there more rotation to come? Or should we start stacking fertilizers? Because with everything that's going on, literally, we're discovering once again how fragile the world is. We had the sneak preview during C19 of how when supply chains break, everything stops, and how, of course, the world stopped as well. But now we're seeing a crisis in the Middle East, and how things like all of a sudden we all become helium experts last week overnight. And the importance of helium, it's not just for kids' balloons at parties. You can't make semiconductors without it. And then who the players are, and when 40% of the supply goes offline, the fear in the market is crazy. So what happens next? We know the Chinese and parts of India, they're stacking gold. Copper is supposed to have a good year because there is not enough supply for the electrification of the world. And then you've got Bitcoin coming back. Many believe Bitcoin bottomed at 60K. Actually, let's dial into you, Rob, for a second. You always bring a nice sense of reality to this. Do you think Bitcoin did bottom at 60K before I go further?
Well, I sure hope not, but that's what everybody seems to say. I mean, it's anybody's guess, and it's a funny thing because like everybody's waiting for. I mean, for the TA folks, they're waiting for the 200 moving average, and they're kind of like saying, okay, is this where it's going to go to or not? All I can say is I hope it is. I just have been buying for time. Over time, so I have no idea. That's for these guys to answer, for the TA geniuses.
Yeah, and actually on that note, so the 200 week currently is like 58.2, and we came super close to that. So technically, we did breach on certain exchanges the 60K mark. So you could argue it did bounce off the 200 week. CTO, while we go off on that tangent, was 60K the bottom, or there's a lot of people hoping for another bite at 15,500. As Rob says, the TA people out there, maybe that is just hope.
Yeah, the truth is that we don't know for sure yet. If I can share the chart again, the trend is still down. It turned down here in October, and it's still down. And the pattern that we're seeing here, I don't know if it's clear to everyone, but this is like it's the same type of pattern that we had up here. And when we see these patterns going in the opposite direction of the main trend, they're usually bearish. So more than 50%, it kind of breaks on this side. But the best strategy is to not try to act based on guesses of what we think will happen. It's better to see what actually happens, because it can break on the upside as well. And then it's another conclusion, and it's pretty tight. The upper side there is maybe 76,000, The lower side is 67,000 maybe. So my strategy is clear. I will not speculate on this. I will try to react when it happens. It has to break one of the sides, right? Either it breaks on the upside or it breaks on the downside. And that's when I will take my next bet from here.
Yep.
I hope it goes lower because my conviction is higher than ever in Bitcoin. So the lower it goes first, the better for me, because then we get cheaper prices. But at the end of the day, I'll just play whatever market we get. If it breaks on the upside, I'm going to load up the truck.
Yep. And I made my play at 64K, so we'll see what that results in. But yeah, another bite at 60K, I think that would be bought up. But in counter argument to your charting here, we do have higher lows and higher highs that could argue it's recovering.
Definitely can happen, but I mean, so it's always the case at this flag or rising wedge formations like we had here. But then that time it did break on the downside, and there was no rush, right? It was pretty clear that it had broken. It retested, I think 5 times or something before it actually started going down. So if that happens, hopefully we have time to react this time as well. And if it goes up, great, I'll just take it.
Yeah. And what we do see here now as well is, again, everybody's saying, okay, where do we go for scarcity because of AI? Over to you, Marty. Where's the next rotation? Gold and silver, are they cooked? Is Bitcoin now heading into its own little cycle? And
I mean, in my
how do you
opinion,
play it?
in my opinion, it's all now going to be macro driven. I think we're going to see forced monetary expansion. We've been saying this for a while. I mean, this war is part of that, you know, a global de-dollarization, the reaction from Trump. We all know this war was about China buying oil in anything other than the dollar, and the US putting an end to that in Venezuela and then in Iran, the 2 central banks that were sort of violating that rule, which is basically the petrodollar recycling mechanism, right? So when the petrodollar recycling mechanism comes under stress, then foreign central banks buy less US treasuries, US borrowing costs rise, and then you see Fed balance sheet expansion and global liquidity expansion. And Bitcoin is the most sensitive asset, guys, to liquidity. It always is. Its correlation is ridiculous because of its finite supply. So I believe it's going to absorb a disproportionate share of that impulse we're going to see. Now, the question is, when are we going to see it? That's the big question. Obviously, the turnaround of Jerome Powell, May 15th to Kevin Walsh, that signals potential, you know, major monetary policy change. Back to QE, potentially, rate cuts, we don't know. But I think there's going to be forced monetary expansion. And when you ask which asset right now is asymmetric to that, it's got to be Bitcoin, in my opinion.
Yeah. And in fact, what I did a few weeks ago, I tracked the correlations between all the major assets like S&P 500, gold, Bitcoin, etc., to global liquidity. And the only one that didn't follow was Bitcoin, and it's completely divergent right now. So the big question is,
absolutely, 100%.
Yeah. So getting back to this, what everybody wants to know is, do we wait for October for that magical bottom at 40K, 15K, 20K? Or is it in?
Everyone is waiting, right? Everyone in the crypto universe is waiting for that final drop to test the lower weekly logarithmic, which is like 62 again. There's a large amount of liquidity there. If you look at a heat map on Binance, sitting down there at like 62 looks like they're going to flush there one more time. But if you look at this reaction today, I mean, these are very strong. Look at Strategy, look at BlackRock. Their wallets have never been bigger. They are buying every dip.
Exactly.
I think we have an institutional flaw.
In fact,
Sailor
bought again another 1,000 Bitcoin. Not as huge as the last 2 weeks, but still, nonetheless, it's big, and the supply is running out. So, Rob, you know a lot of people that are waiting for October because historically, the midterms is the bottom. Tell us what you believe. I personally believe, I think 60K was as close to the bottom that we may see this cycle because there's simply not enough scarcity in the world and there's too much money floating around. And in fact, if you look at what we've just gone through with the Middle East, the fact that we just barely breached the 200-day moving average on the S&P 500 is an extremely bullish sign. It tells me there's too much money chasing too few assets. Over to you, Rob.
Yeah, there's a lot of stuff out there, but I mean, like, just take a look at how many people were waiting for end of Q4 to really things to blow up, how many people are waiting for the altcoins to explode just like they did last time, and how many people were calling for a super cycle? A lot of people, and they were all wrong. So when we kind of go through this, and it's a funny thing when we say, okay, well, it's like, I believe in the 4-year cycle still. So if you wait till October, sure, you can go that route. Wait for the 200-week, 250-week, 300-week moving average and kind of go from there. That's true, but how many things were actually wrong beforehand? And how many people actually got it right? I think CTO is one of the few that I've heard of that actually, nailed part of that Q4 part. So if everybody's just waiting for that final drop, it's only when the market waits for the final or for everything that people believe in, it just doesn't happen. Because the big money, the ones that actually do things in the background, they're the ones that go, oh, you want that? We'll do this. And before you know it, you're like, oh, I missed out. So for me, when I take a look at this, and Marty's right about liquidity and the M2 money supply and the global money supply, there's a lot of money sloshing around. It just didn't find a way right now to it. Will it find a way later? Sure. But I'm not going to wait all the way down to October or for a specific time frame. I'm just going to get in now because, like you said, there's too much liquidity chasing too few assets, and there's only so much that is so much finite you can do, and that's for me.
Do everything in layers and don't quibble over 5K or a couple of K if that is the case. Now, there is something coming. We hinted at this, the Clarity Act, and Rob, you just indirectly hinted that there are puppet masters in control of the markets that the rest of the world doesn't see, which we know. Same thing with governments and war and everything else. There's things behind the scenes we do not know. But we know Jerome Powell's gone in the middle of May. Bye-bye. That's going to be very welcome. We know the new guy, Kevin, understands AI. He's younger. He understands that the government data is all late and wrong. And then we have a Clarity Act coming. So the question is, there are things happening with crypto. Like, all the banks are coming in. Morgan Stanley, 11 trillion assets under management, are now potentially recommending 2 to 5% into Bitcoin. Just that alone will take Bitcoin way north of 100K real fast. But the question is, what happens next? And with the Clarity Act, a lot of people are thinking it could be a great catalyst for crypto, or it could be letting the banksters in the back door to control the whole space. Rob, very quickly to you first. And before I forget, links below for all these legends, and you can watch in all our channels. But Rob, are you concerned about the big banks coming in on the Clarity Act, or do you think it'll be a net positive for the space?
And it'll be a net positive, but it's not what we really want. They'll make provisions and they'll work with us a little bit, but at the end of the day, they really just want to take control. That's what banks do. But regardless, if you take a look at the Clarity Act, it's going to do one good thing. And it's going to be great for payments, and the payments are going to be on Tether and USDC, which is 93% of the total stablecoin market. And out of those rails, you just got to look at the best, like I've always talked about. And the best for the rails stands for Binance, Ethereum, Solana, and Tron. And those are right now the major rails that are going to be used. So moving forward, I just look for that.
And we'll get to that in a minute because we have some very interesting news too. Marty, very quickly from you, Clarity Act net positive or banksters in control? Should we be paranoid?
Absolute net positive. I mean, as a long-term Bitcoin holder, I've been stacking Bitcoin since 2009. Retail are the sellers. They are the fearful sellers. They're the people that believe in the cycle. They just sell. So I'd rather have stronger hands, investors rather than traders, and banks, institutions, ETFs. In my opinion, they hold. They create an institutional floor. I think it's good for the asset class. This volatility needs to go, and it's not natural. So I'm in big favor. I think the Morgan Stanley ETF approval, when it's on the last days of approval now. They just filed their second to last form with the SEC. I think when that goes live, guys, don't underestimate that. I think it's another BlackRock ETF approval announcement type event.
Yeah, exactly.
I think you're right. That will shoot us back up to that into the 80s and 90s.
And between Sailor and the ETFs, which the ETFs have returned over the last 2 weeks in force, every $1 billion that goes into a Bitcoin ETF, the price goes up by 3.1 to 3.6%. That cannot be understated. CTO, one of the questions, Clarity Act, people in Europe say, why the hell do I care? Why do you care?
I think, was it 2 years ago or something like that? I had a year-end prediction that the banks will become the biggest marketers of Bitcoin. Like they were so against at that time, right? But once they can offer the product, my feeling was that they're going to flip 100%, 180 degrees, and suddenly say that this digital asset class, it's really the future, and you should really take it seriously and put a share of your portfolio in it, and so on and so forth. And I think that's what we're seeing, and I think that will continue. I saw some benchmark now, which of the European banks are offering crypto exposure, and it's I think it's about 1/3 already of the major banks, and most of the others are considering it. So yeah, I think we're getting this regulation in place, and suddenly they were so against it, they will market it to their clients, and that will bring up the price definitely.
Excellent. Thank you for that. Now, Rob, you tripped on this. I don't know if it was accidentally or on purpose, or you did your homework, looked at the deck in advance, but this was huge news. Okay. Tether, as we know, still leads in raw market cap, but volume and usage, transactions actually matter to stablecoins. Stablecoins are the #1 use case right now for crypto. And we haven't even spoken about the AI agentic world as well that's coming soon. But this is USDC for the first time in a very, very long time, flipped Tether, but flipped it in a very big way. It's gone from 64% of transactions from what was 15% a couple of years back. And Tether is only doing 36% of transactions. That is a massive flippening of these assets. And this is good because all of this is happening, by the way, on Solana. Cheaper, faster, higher throughput, high velocity payments on Circle USDC. That is massive. I think Solana handle 78% of all Circle transactions. But Rob, back to you on your stable coins. Did this take you aback, or did you see this?
No, but we share the same website. I'm always showing that Visa on-chain analytics. And, you know, like if people think, payments won't be a big thing. It's a big thing if, like, you know, Visa and MasterCard are tracking it, and Visa has its own website, and they pretty much track it. And you can just take a look at it right now. Everybody can go there and say, oh, look, there's all that transaction volume that's going. I didn't know it had actually flipped already. That's a pretty big move because Tether was the leader for quite a long time. Yeah. For USDC to come in like that. Yeah, it's pretty big.
In fact, the flipping is huge. I mean, it was 41% a few months ago. Now it's 64%. And the agentic revolution hasn't even kicked in yet. Marty, what do you make of this?
Yeah, I mean, I've been
tracking
Circle. Yeah, absolutely. I mean, USDC has issued $4.5 billion of USDC this year alone. Solana did $1 trillion rolling 30 days of USDC. And people say to me, well, where is that? Who's doing that? Guys, understand institutions are starting to move liquidity between each other using blockchain, using stablecoin. Since Genius Act became law, which goes actually into full implementation in January, this will be the new way that companies, institutions, pension funds, anybody, exchanges, market makers, you, me, when you want to send large amounts of liquidity, you will use stablecoin. And USDT is not compliant. They've made plans to make a US compliant one, but USDC from Circle remains the most fully verified, fully audited, compliant stablecoin. And so institutions and enterprises are using it to move money between each other. And then people say, why Solana? Because institutions want fast, cheap transactions as well, just the same reasons we do. So they're switching to Solana. So in my opinion, this is a major event. The use of USDC as an inter-institutional payment mechanism.
Playing devil's advocate, Marty, back in the day, you listened to the Tom Lees. Hope he's doing okay, by the way. Poor Tom Lee. He said people will only trust Ethereum. Institutions will only trust Ethereum for stablecoin transfers, and Ethereum is going to be the killer in the space. He's been proven wrong again. Counter that point, or do you agree, Marty?
Oh, I disagree. I think that should come. I mean, Tom Lee was educated, from the whole original Bitcoin trilemma, decentralization thing. Everyone came out of that thinking that if you weren't, fully decentralized, every validator had to be involved in consensus that you weren't safe. And that we've been proven to be nonsense over the last years. Decentralization that's not the primary concern. I think at the end of the day, when the transaction processes for those milliseconds, decentralization might be important, and these other blockchains do that absolutely sufficiently. So I think Tom Lee's whole entire thesis of Ethereum comes from misinformation, in my opinion. He doesn't quite understand it, and I think the users of USDC understand it. They want a fast transaction. Once it settles within, 1 to 2 seconds, it's settled. For that moment in time, it was fully decentralized, and they're comfortable with that. And so I think Tom Lee's a little bit misguided. And honestly, I think the rubber will meet the road.
The firms like Visa, they're smart enough to understand they're going to be disrupted unless they embrace or die. And finality for a Visa transaction is like 3 days plus, depending on when the weekend lands. And now they're going to move to 40 millisecond finality, which is big. So they understand the writings on the wall. Over to you, CTO. I saw you snooping around the Visa analytics site. What do you think of this flippening between Circle and Tether?
It's fascinating, actually. Yeah, here we see it exactly like you said. If I can share the screen again. So
one point, Jack, before we continue. The Clarity Act, people must understand, a lot of institutions, pension funds, and annuities and things like that are unable by regulatory status to invest in Bitcoin. They can only go through ETFs. With Clarity, it gets commodity status. It gets rubber stamped by the government as a commodity, and those laws will change. All of those pension funds, etc., can invest directly in Bitcoin. It's a massive change. Just wanted to make that point.
Good point.
Yeah, so this is very impressive, and it's really been reflected in the Circle share price also. It has made an incredible recovery the past couple of weeks or past month. So here we see that USDC is number one by volume now, which was very small over here. The green one is USDT and the blue one is USDC. And here we see the different chains. So the last full month, which was February, Solana was actually higher volume than Ethereum. And we can see the different months here that it's not only Ethereum that is trusted. Also, Tron is big on stablecoin transactions.
And Tron runs Tether, by the way. Tron has always run Tether in Asia for the longest.
Exactly. Yeah. But it's clear that it's not one chain only that's trusted. And that's actually been the case for a long time. Tron has been big all the way back here already.
Yeah, Tron is the OG stablecoin player. In fact, that is the whole chain pretty much. This is fascinating. We do have to do a little bit of an early wrap in about 10 minutes. Rob, you still good? But I do want to talk about this piece here. Again, stablecoins, very quickly before we get on to the next topic. Are they the new shadow banking? And again, a lot of people are concerned. And finally, where is the alpha for the stablecoin play? I have exposure to Circle. I know Marty does too. I just heard CTO reference it as well. CTO, do you have a Circle position? Is that how you're playing stablecoins, or do you buy Tron, or what's your game?
I don't have a Circle position. I wish I did. I kind of fumbled that one a little bit, to be honest. Can't win them all.
Can't win them all. Hey, sorry guys, I do got to drop off right now. But I will say that the last piece first, stable coins, people say it's boring and, really going to do it. Just remember that Jack Dorsey, as big as he is for Bitcoin and how he believed that we should be using it for payments and really wanted to push that with Square, just came out last week and said, well, everybody seems to want to use stable coins, so we're going to add them in and we're going to push those all the different retail. So those types of things, that's where the market dictates what's going to happen. And Jack actually listens, and Tom Lee kind of gets a little bit confused at some point, but we'll see. But that's how you're supposed to do it. The market decides, you go with the market. Anyhow, thanks everybody. I got to drop off. Apologize.
Thank you, Rob.
You have a good day. Yeah, I mean, in summary, Solana just wins on cost, speed, and usability, guys. It's faster, cheaper, and being more their infrastructure has been institutionally accepted. And the partnerships are insane. Visa, MasterCard, Stripe, WorldPay, it's PayPal. Everyone is integrated. So that's what's going on.
All right, let's get into some era digitalis. This guy is a Cloudflare CEO. They manage, I think, 20 or 25% of all internet traffic. And he came out and said, AI bots are about to flood not only the internet, but everything else. And we also know AI bots are about to flood blockchains, especially Solana with X402 payments, etc. And the question is, here we are on the cusp of humans being completely wiped from the internet usage. It's going to, first of all, eclipse in a year, i.e., all the internet traffic will be bots. And then after that, it'll be 7x, humans to bots, i.e., bots will outrun humans 7x, and then 100x. It's going to be crazy. But CTO, I know you look very closely at Era Digitalis. Did this come as a surprise to you, where your web traffic managers are saying it's coming, it's going to be massive, and nothing will stop this? And one of the simple examples, so people can wrap their heads around, is imagine you're looking to buy a new camera or a new computer or something else. You might go to 1 or 2 websites. A bot will go to 1,000 websites instantaneously. That's the difference, and that's the traffic.
Yeah, I mean, every week almost there's a new AI breakthrough. I mean, I'm astonished every week almost. Like, wow, I get this feeling. It's like when computers were new or something, like, wow. And I mean, Cloudflare CEO who basically runs the internet saying this. Yeah, no one has better insight in the, growth of humans versus machines on the internet than them. So yeah, it's gonna happen. And like you said, James, first it gets bigger, and then it gets 10 times bigger, then it gets 100 times bigger. And these agents, they're going to talk to each other. They're going to have their own forum, their own language probably, and they're going to have money to transact between each other. And they're not going to use credit card, guys.
No, it'll be stable coins. And this is the fantastic convergence between everything: payments, regulation, blockchains, internet, AI agents. Everything is going down one path really fast. It makes my head spin. It makes your head spin, CTO. Also, Marty, as a technologist, is your head spinning right now, or did you see all this coming? That's the joke.
I mean, we always knew that these technologies were built, AI and blockchain were built with a larger vision in mind, which was obviously agentic commerce, call it that, agentic commerce. And you can see large companies now like Gartner and Deloitte are coming out with these insane predictions. I mean, my brother works for Deloitte. They just came out with a prediction. There will be $17.5 trillion of agentic commerce by 2030. That's 4 years.
Say that one more time for the audience. You said it real fast.
Deloitte just came out with their report, and they're traditionally anti-blockchain. They were very pushing back on blockchain for the longest time. They've done a complete pivot. They've said they expect 17.5 trillion in agentic commerce before 2030. Gartner, the other major influencer, said 30 trillion in annual purchases by 2030.
That's US GDP, by the way. That's US GDP, just
it's
for
massive.
perspective.
1,000 AI users for every human. So, I mean, understand the volume of this. And this is why USDC is overtaking USDT, because it's compliant with the agentic commerce. So, and I mean, look at Brian Armstrong. He's as bullish as ever as well. He believes trillions in new transaction volume will come from AI agents acting as economic actors. And yes, you must understand the economic actor statement. Our understanding of what of agentics are right now is very naive. With Metcalfe's law, the agents will start to, talk to each other, and we don't even know the use cases. They might start businesses overnight, and stablecoin will be the liquidity of those businesses. They might take over all shopping. They might, reinvent online commerce. They will reroute and find the cheapest prices for everything. Everybody wants a cheap price. So everyone will implement agents to find the cheapest price. Just understand the magnitude of this. I think this is literally the biggest use case of crypto, just on the verge of starting up.
It's funny, you mentioned Deloitte, an accounting firm. Basically, the core business is accounting, but also a lot of consulting as well. The Big Four, they always disliked crypto. And Ernst & Young just came out with this late, I think on Friday, said live
There you
on
go.
CNBC. Big institutions are now buying crypto and Bitcoin. 70% will increase allocations this year. 30% will invest 5% or more. Remember, these guys are tied into the big institutions. They audit the big institutions. They know where the bodies are buried. This took me aback. Again, Deloitte, Ernst & Young, PwC, KPMG, that's the big four, I think. If they're all getting in there, as well as all traditional finance as well. CTO, what do you think of accounting firms now having a close eye on crypto?
Yeah, I mean, we saw it early because we kind of in adjacent spaces, but eventually everyone will realize that this is something. It kind of seemed obvious to us very early, and we were kind of scratching our heads why so many entities were against it and why they didn't get it. Okay, they're catching up now. They're understanding that it's useful to have something that's similar to gold, but it's digital. And it's useful to have stable coins on a fast blockchain so we can send money to each other without paying 2, 3, 5, 10% in fees to different intermediaries who honestly don't add any value. It's like a obstacle.
And for me, finality is the product. Finality is everything. It's not necessarily fees. The question is, CTO, do you care about 3% or do you want your money that's irreversible in less than a second? That for
exactly.
Many
like if anyone has ever, if anyone here in the audience, if you ever sold anything with credit cards, you realize like if you charge money with credit cards, there's something called chargeback fraud. That means that the customer receives the product, then they go to their bank and says that it wasn't as promised, or it was I was hacked. It wasn't me who bought it. Okay, then the bank will literally take the money back from the vendor, and the person gets it back. And this is like a chargeback fraud. With the crypto, you can't do that. You have to actually convince someone that you have a claim on the person and so on. So there's all those issues that stablecoin solves. And there is another factor here, which I think isn't so important when it's humans sending transactions to each other, because we're fine with a little bit of a delay. But if we're imagining that we're all super fast bots here, we're agents, and we're operating like on second basis, we're building businesses and seizing opportunities and trades where half a second really matters, because everyone else's agents are going after the same opportunities. Then whether the transaction takes 3 days or 5 minutes or 5 seconds or 1 second really matters. It's going to start mattering in a way that it doesn't today. And that's why I think like fast finality, because finality is key, right? You cannot really trust that the money is there until it's final. So yeah, I think fast finality will really start to matter much more in the agentic economy than today.
Yeah, it's so funny. I placed a trade this morning on Tesla. I had to have my finger on the button, on the trigger at basically 9:30 a.m. Eastern time, 6:30 a.m. my time. I had everything lined up, ready to go. I need to know in seconds if that is filled or not, because I know this thing is going to go right up, and it's up like $15. So if you didn't get it at the open, you were chasing for the next few hours. And that's why things like getting that fill, even notification on that fill, sometimes takes 3 or 4 seconds, 5 seconds. It feels like half an hour. And this is, again, I want people to realize finality is the product. And you've stumbled into something, CTO, here, which is on the agenda, is the real impact of AI and finality and speed and blockchain and everything else, the tokenization, the Clarity Act, etc. What happens to the impact on traditional trading and for the traders out there? Are they going to lose their edge? Or the agents going to take over? To you, Marty, first, and you think about this one, CTO. But what happens to, the pace of change in this world? We're seeing 10 years of change happen now within 6 months. What's the world even going to look like at the end of this year by Christmas? Do you think about that?
it's starting to look more and more like the Elon Musk prophecy, right? Humans will be less and less involved, and money will become less and less, important.
Yeah.
It might become an agentic construct, money, at the end of the day. I think that trading is going to metamorphosize entirely. I think that the whole concept of price discovery, I mean, the whole point of trading is to do arbitrage. So find, buy low, sell high, find spread. There's no way humans can do that as fast as agentics. So I think we'll be completely pushed out of the picture. What you will find is people will build unbelievable trading agents. And I think that's like the next frontier, is the discipline of building the next agentic architectures in trading. And whether they'll be productized, or whether they'll be open sourced, or whether the Mag 7 will get involved, or whether the trading people will get involved. But it's clear that the NASDAQ and the New York Stock Exchange are just about to get hit with a major seismic evolution change in high frequency trading from agentics. I think it's a major thing we'll be talking about on these shows in the coming months.
And in fact, BlackRock, they were supposed to set up a brand new exchange that's competitive to ICE, the Intercontinental Exchange, which basically runs New York Stock Exchange, etc., in Texas. And it's going to be blockchain based. Any update on that, Marty? I've lost track over the last few months.
I haven't seen any new news on that. No, haven't heard of that. They definitely registered everything. It's all highly registered. I'm sure we're waiting for an announcement. I haven't heard anything. You're right. It's been pretty quiet.
But the one thing is for sure, markets are going to go 24/7. Markets going to be tokenized, and markets going to be run by bots. That's it. We as investors, I believe, will still have an opportunity, but over the swing trading range, 3 months, 6 months, a year plus, that'll be our edge. But day trading and all that type of stuff, gone. Not going to happen. You will not be able to beat a machine. Mr. Era Digitalis, CTO, can you beat a machine?
Oh, definitely. Agree 100%, James. Like the short-term trading, that's gone. It was actually gone some time ago, I think. But the longer-term trends are not gone, because AI can't answer it today any better than anyone else. Like, will Bitcoin make it? Will Tesla become huge in the future? Those kind of, will strategy make it? Those kind of big questions, AI doesn't know any better than us. So I think the long-term trends, the medium-term trends, they will stay. Day trader is dead, at least on the main markets. And if it's not dead today, it will be dead tomorrow. So I think there's no future in that. The longer term outlook definitely remains. I don't think that will change.
Yeah. Excellent. Penultimate topic, real fast. Again, these questions sometimes sound repetitive, but people still have a burning desire to understand how to position themselves. As you know, sometimes you've got to think in kind of 5-year cycles and position yourself before the cycle even begins. We are now in the big AI revolution, but that has given birth to another revolution, and that's what I call the scarcity revolution. So, Marty, to you first. How are you positioning yourself, or how would you advise, without giving advice, people position themselves for this AI revolution and abundancy? Now, I don't buy in. There was a couple of things I don't agree with Elon Musk. He believes in ultra high income and everybody will have everything. There'll be no need for money because everybody will be loaded and rich. That's complete BS as far as I'm concerned. Sorry, Elon, but I do not buy into that. But how can you position you and your family for this abundance, which will drive scarcity to the moon? And will we have everything? Or do you buy AI itself?
I mean, I stick with my original thesis. What you do is, while you can, we've got this rare opportunity to invest early in the infrastructure that creates and supports this abundance. But all the infrastructures we're talking about, the networks that run AI, agentic commerce, the stake of these networks, this is very early. These are, I think, the opportunities to buy these very scarce assets. Bitcoin, Solana, all of these things, they're going to be extremely expensive once these things kick in. And so, in my opinion, and energy, obviously energy, remember, it's all Bitcoin to me is compute times electricity, right? So you need to invest in all of those infrastructures behind compute. And I think, obviously AI, chips, and all the things that go with that. AI ETFs are great. Energy ETFs are great. The creation of energy, small nuclear reactors, uranium, all the things, the infrastructure that sits underneath all of this paradigm shift we've been talking about. Invest heavily, in my opinion. That's the scarce layer.
Yeah, interesting. And there's a very interesting point here from Pandax Banda. AI would have been much faster in recognizing Bitcoin as a global digital currency than big banks and nation states. In fact, there was a study, I think, last week where one thing that all the AIs agree upon, that Bitcoin is a very good store of value. And AI does its own logical thinking. CTO, do you believe the AIs are correct that Bitcoin is the most logical store of value, and they would have recognized it a lot earlier than the big banks?
I think it was easy to recognize it earlier. So yeah, definitely. I think I think everyone who had actually looked into it recognized the opportunity. The people who were against it, they had not spent 10 minutes trying to understand what it was. That was my feeling when I started looking into this in 2017. The people who were against it didn't know anything. So it was like a baseless hate almost for the unknown. I think their feeling was that those tech guys had taken over everything, and now they will come and take over our money also. And now it's enough. We have to shut them down. That was the feeling. It had nothing to do with the usefulness or the value of Bitcoin as such. Yeah. So AI would have been more logical in that situation, absolutely. But so like maybe I should formulate better. I'm not saying that we are smart so we can understand what will succeed in the future and AI cannot. I'm saying that I think it's very difficult for anyone, AI or human, to know exactly where things will go. But we can see the trends. We can see that something that seems to be picking up and gaining momentum, for example, Bitcoin. There is no doubt if we zoom out and look at where we were in 2017, where we were in 2019, where we were 2022 versus where we are today. It's come an amazing distance forward. And that means the trend is going up. And that's what I'm saying. Things that are gaining momentum tend to continue gaining momentum. That we can identify.
Another interesting point here from Blazo. Abundance is sucked up and redistributed for profit. Yes. Tokens, data centers, compute, everything will be sucked up and will not be given away for free. And this is why it's very important, I believe, to own some of this infra that's there. We'll talk about a big piece of infra news in a second on our final topic. Marty, do you agree with Blazo here? Abundance is sucked
absolutely.
up.
It's a great point. I love it. It's a good post. 100%.
Yeah. Okay. And the final thing, I found that study, 36 frontier models were asked about what the best thing, it was Bitcoin or stable coins or fiat and everything else. And 36 AIs, 48.3% of them said Bitcoin. And 0 models picked fiat as the number 1 choice because fiat is going to 0. Even AI knows that, which is great. Okay. Our final topic, we had a crazy weekend. At least as far as I'm concerned. We had a guy called Elon Musk give a presentation about his new terafab plan. They want to build not 1x or 2x, but 10x, 100x the actual chip capacity. He says if he doesn't build his own capacity, they're going to fall behind in the world because the TSMCs and all the other chip players out there, they cannot scale the way that Elon needs for his cars, for his bots, for his data centers. And this is incredible when you break this down. But he wants total control over his destiny. He doesn't want to be capped or limited by supply chain constraints or chip constraints. And they will be doing everything. They're going to unthink how they actually create semiconductors, GPUs, processors, etc., with a big focus on inference, and they'll be guaranteed their Tesla self-sufficient supply. Now, the really interesting thing is Elon Musk said yesterday, he said Starship is a harder technical challenge than building a fab that builds semiconductors. And all the fab experts will say, oh, it takes 50 years to build expertise to build a semiconductor fab. CTO, Starship, Fab, what's easier? And do you believe Elon can get this done? Everybody always fades him anyway, but he always delivers.
He can get anything done. Absolutely. It's not that difficult. I mean, you hire the people, you build the factories, and nothing takes 50 years. You just, hire a couple of guys and get going. Everything can be done in 2 years.
Well, people argue, Intel have been doing it for 50 years, and they're nowhere near where the Taiwanese competition is.
Yeah, so better hire some Taiwanese then.
I mean, chip shortages are his biggest supply chain risk. So just in typical Musk fashion, he's going to solve that problem. I think it's genius. He's going for 1 terawatt, right? 1 terawatt of AI compute production per year.
Which is 200 billion chips or something in a factory that's 100 million square foot, which is about, I think, 5 or 10 times the size of Giga Austin. So the scale at which
it changes it as a car company. It's no longer a car company valuation, right? This is the initial announcement. We've always known this is going to happen. I think this is just the catalyst right here.
What's also completely fascinating for Tesla investors or SpaceX investors, 80% of the bill will be footed by SpaceX. We know the IPO is coming. They're going to raise 50 billion plus. Now this forecast is going to be over $2 trillion IPO, which should make it the fourth or fifth biggest company on the planet out of the gate. So it means it's got to be added instantly to the S&P 500. It can't not be in the S&P 500. So everything is changing and everything is happening so fast. We keep going back to that.
For the people in the audience, James, do they know that this fabrication plant that's announced in Austin will be the largest semiconductor fabrication plant in the world?
By far. By far.
In the world, people.
Yeah.
In Austin, Texas. Think of the effect on Austin, Texas.
Yeah, it's mad to think of. But the really important thing is SpaceX is going to foot 80% of the bill, and 80% of the chips are going to go into space, launched by Starship, which is a harder technical problem. So the vision is absolutely mind-blowing. And if you just think about how far behind, there's 14 different businesses that this Musk industry is going after, and then there's space on top of that, but how far behind every other player is on the planet, and nobody has a grand vision. And it's become a national security issue too. So any final thoughts on that or the plan for the week? Bitcoin is looking very strong. Everything's looking very strong.
I have one thing that I want to ask you about, James. I've thought more about the stretch and the proposition of yield based on Bitcoin, which must be a very appetizing proposition for a lot of people in the world. Do you think it's enough to kind of turn Bitcoin around, like by itself? Is this a catalyst?
Well, it's funny because they were able to buy, I think, multiples of the issuance week to week with just, I can't remember the exact number, I think $300 billion of STR sales in a week. Buys out all the issuance. But what happens? This is the interesting thing. What happens if it does catch on and they start doing 30 billion a week? Okay. The only thing that the Saylor needs to do is he needs to increase the bag size of Bitcoin. The more Bitcoin he buys, the more he takes away the supply, the more the price goes up. As long as his accretion of Bitcoin goes up higher, the yield on his bag goes up higher than the 11.5% yield on the STRC. He wins, and he knows this. This is the kind of iPhone moment. It's so obvious. It's almost painful. And I know he's going to come up against some resistance to this, because how can a software guy completely hack the way money runs with Bitcoin as a base? The banks must be going out of their minds right now, especially money market funds and everything. It's just, I've been watching this guy carefully for a long time, and it's fascinating. I think when they talk about STRC being the iPhone moment, I have more than half of my cash in STRC, and I'm ready if there is a big capitulation event that will be deployed into risk assets. But in the meantime, I'm happy with 11.5%, which also has tax benefits too.
But just announced the 21 million. What's it? 21 billion today. He announced it on X.
No, not that big. The buy wasn't that big.
21 billion. Look, I just posted it earlier. Strategy has just announced 2 major new ATM equity offering programs, each sized at 21 billion for a combined 42 billion in potential fresh capital. Primary reason to acquire more Bitcoin. It's their latest post strategy.
And what he understands is all he has to do is outrun everybody else and buy as much as he can. It doesn't matter the price, because once it runs out, then the price goes vertical. And that's his game. And that's why you always see him smiling. He's just absolutely confident, which drives people nutty. And he's been through a rough patch, you know, last year. NAV premium fell below 1 and stuff. But you know, it's one of the things that's amazing to me is we're seeing, if you look at the probably two of the most interesting cats in the world right now, they both understand rockets and thermodynamics and physics. That's Elon Musk and Saylor, but they're applying those things to money and wealth creation, etc., which I find very interesting. So
100%.
Anyway, final thoughts, CTO, for the week ahead. We're at an hour already, gone longer.
Yeah, of course, a lot will depend on what happens with war. Will they need to escalate it, or can they wind it down and say, guys, we won, thanks, bye, and everything goes back to normal? I don't know. I wish I knew.
Yeah, by the way, the S&P 500 just added 1.3 trillion in market cap in an hour. 1.3 trillion in an hour. The pace
there was words of clarity compromise, right, on Friday. That I think to watch out this week. Seems like there's some kind of banking compromise, and there's even dates being put out, April 13th or April 20th as a full vote on clarity. That's news that's coming from Cynthia Loomis. So that could happen this week.
Yeah, apparently it was last week. It was 99% sure thing it would go ahead, but we don't know what the details are and what the banksters have done. But anyway, things happen fast.
Japanese CPR this week. The other thing, Japanese CPR this week. That'll be interesting. But otherwise, pretty slow. Yep. The war. Awesome. The war dictating all news lines.
And I believe the US president will do everything in his can to get to peace as quickly as possible, because the midterms are coming up. They're like 6 months away, and there needs to be growth in the stock market.
Maybe I can ask you guys that. How is the word on, like, in the ground in the US? Are people, how do they feel about this? Are they angry that this is going on and they want it ended, or they feel that?
No, nobody likes war, and half the people don't like Trump. So you can imagine the sentiment is pretty negative. But most people day to day, if you walk into a store to buy a coffee, people are completely unaware of what's going on in the world. And they're the people, unfortunately, that are going to get left behind. The people that are watching the show won't get left behind, but the vast majority of people have no idea, you know, what's happening with war, what's happening with AI, what's happening with technology and everything else. It's just mind.
I agree with that 100%. I'd say 9 out of 10 Americans have no idea there's even a war going on, why it's going on, that crypto even exists. It's unbelievable, the polarization in the US right now from the media.
Exactly.
100%.
Well, don't forget, I want to say a big thank you to the moderators in the chat, Team D Tesla and Cypher Sniper and K8 and everybody else. And shout out to Blink, Panda, AR Ron, B-Man, Blazo, Swiping and Swiping. And don't forget these legends, links below, watching all our channels. Thank you, gentlemen, for a great week. Let's buckle in. Let's hope for peace. Let's get that price of oil down to below $80, and then the markets will continue. But
thank you very much.
Okay. Have a great day. A great week. Thank you, CTO. Thank you, Marty.
Thank you, everyone.
We'll see you on Monday.
Yes, sir.